Welcome to AHA Math and Science. Recently, the voice of the R word has become louder and louder on both the Wall Street and also the Main Street. So indeed, it's a trillion-dollar question to answer whether a recession is inevitable, and if so, when this recession may occur. So in this video, we try to answer these two questions. First, can a recession be avoided? Second, if a recession cannot be avoided, when the recession may occur. So to answer these questions, we can actually look at history and usually can offer a lot of insights about these questions. So since 1940, there have been a total of 13 recessions, which are represented by these shaded areas on this plot here. So this plot is basically the unemployment rate versus time since 1948 to current. And the other recession which occurred around 1945, as well as the unemployment data from 1940 to 1947 can be found in this source here. So this is the 1945 recession. And then this is unemployment data. So look at this chart, and we can find one common feature. That is a rapid increase in unemployment rate. For example, here, and here, and here, and here, is always accompanied by a recession, which is denoted by this shaded region. So that seems to be the common feature. And the difference between these different recessions is that there's a delay from the unemployment rate bottoms. For example, here is kind of the bottom or the lowest unemployment rate to when the recession starts. That time delay varies. So here, this is the 1990 to 1991 recession. So the unemployment rate bottoms at 5%, and then 16 months later, a recession starts, at which the unemployment rate is about 5.5%. And another example is here. This is the 1973 to 1975 recession. So the unemployment rate bottoms at here, and then a month later, just 1 month later, a recession starts. So that delay from the unemployment rate bottoms to when the recession actually starts varies. But one thing is very clear. Whenever unemployment rate bottoms, by definition, from that point on, the unemployment rate can only go up. So once the unemployment goes up, there's always a recession. So the feature we need to really identify is when the unemployment rate bottoms. So what is our current case? So the unemployment rate peaks during the pandemic, and it has been trending down since that time. So currently it stands about 3.4%. So this is a pretty low unemployment rate. And at some point, this unemployment rate will bottom. And then once it bottoms, it can only go up from there. So we just don't know when it bottoms, but based on history, we know that eventually the unemployment rate bottoms. And after that, a recession will always follow. So we have basically answered our first question, can a recession be avoided? So it looks like from this history data, a recession cannot be avoided once the unemployment rate bottoms. And unemployment has been trending downward, eventually it has to bottom. So a recession will follow sometime later. Now the second question is hard to answer, which is basically when this recession may occur. So in order to answer these questions, we're going to compare the data for all the 13 recessions in this chart. We're going to look at the unemployment rate at the start of the recession, and the unemployment rate, the lowest unemployment rate before the recession starts, and then particularly the delay from the unemployment rate bottoms to when the recession starts. And here's a summary of the data. So this column here, the second column, is basically the unemployment rate rate at which the recession starts. So you can see that it ranged from 1.2 to 7.2 with average value of 4.4. And then this next column is the bottom unemployment rate. In other words, the lowest unemployment rate before the recession starts. And that value ranges from 0.8 to 7.2. And that value is always lower or at least equal to the unemployment rate at the start of recession. And the value average is about 4.0%. And then the last column is most interesting, which tells how many months have passed once the unemployment rate bottoms to the start of recession. So this is this delay that we are focusing on. So that value ranges from 1 month to 16 months with average value of 7.8 months. So there's a lot of information here, and perhaps it's much clearer to actually look at this data, put this data into a chart. So here's a plot of this delay, which is how much time has gone by, or the delay from the unemployment rate bottoms to the start of recession. And then the horizontal axis is the lowest unemployment rate before the recession. So in other words, the bottom unemployment rate, the rate at which the unemployment bottoms. You can see there's a huge variation for both the lowest unemployment rate from less than 1% to above 7%. And then the delay in terms of how many months has passed from lowest unemployment rate to the recession starts varies from 1 month to like maximum 16 months. So it's a huge variation. So, so what is our current situation? The current situation, so this is basically the range we've been talking about from 1 month to about 16 months. So the current situation is the unemployment rate peaked at 14.7% during the pandemic, and it has been trending downward, and currently it stands at 3.4% in January of 2023. So this puts us, this unemployment rate on the plot here, right at here, 3.4%. It doesn't mean that this is the lowest unemployment rate, but one thing we can say is that for this incoming recession, the lowest unemployment rate is either 3.4% or it could be lower than that. That leaves us 4 data points that we can reference with, which are these 2 data points and then these 2 data points. So they kind of fall into 2 categories. For these 2 data points, it says once the unemployment rate bottoms, the recession could occur from 12 to 15 months. And then the other 2 cases, a recession will come very soon in about 2 to 4 months. So what is the take-home message? So basically, for the first question, the answer is much sort of certain. We are very sure that from the history, we can look at the history data, that it looks like the recession cannot really be avoided. So a recession will come at some point. So the second question, when this recession will occur? So these questions, first, we need to identify when the unemployment rate bottoms. So usually that can be represented by the unemployment rate. We'll see like 2 to 3 consecutive increases. And then we can kind of from hindsight, we can tell the bottom or the lowest unemployment rate already has occurred, such and such. And then once the lowest unemployment rate is spotted, and from the history, from this data, we can say that the recession could occur ranging from 1 month to 16 months. So in some cases, it could occur very, very fast once the unemployment rate bottoms. In other cases, it could happen like more than a year later. So for the second question, we would say that there's a lot of possibilities. So you want to spot the unemployment rate bottoms, then the recession will occur, from 1 to, more than 1 year later. So we could say that we may have a recession, starting next month, or a recession could occur sometime next year. So this is what we can say, about the second question. So I hope you have enjoyed this video. And if you like this video, please make sure to click the like button, and also make sure that subscribe to our channel, and so that you can see more videos like this one. And thank you for watching.